First, of course, is the Indian economy itself that, within the context is the growth prospects and others. And we did have issues of COVID, but then management of COVID and the V-shaped recovery and, of course, emphasis on several other things from the part of the government in the form of Atmanirbhar package, significantly for CPSC on capex. Now, growth has been an important factor. Corporate governance is another in the CPSC. Third factor is, emphasis on aligning their incentive system more in tune with market, both in performance evaluation system, introduction of, for example, new indicators such as, return on capital employed, return on equity, asset turnover ratio, the important considerations which are for the shareholders, communication of that performance. And we have also brought in new listings, some dilution. And the fifth factor in this is the calibrated disinvestment strategy. In fact, what we have been articulating as a new paradigm, in fact, it is something which has been, practiced by us through various initiatives and actually brought to a sort of a package, more like in paradigm where we are looking at everything. We had a consistent dividend policy in this as a capital management strategy where every CPSC was asked to at least share 30% of PAT or 5% of net worth, whichever is higher, as a minimum, and more like consistency without sacrificing growth. So it's not that, we were interested in maximizing dividend, but it was a consistently something is to be given. Profitability is to be stressed, but at the same time, use that resources, your own retained earnings and debt to take up new projects, execute them, go to a higher bottom line, higher top line. So I would say all of these measures have been responsible for actually market perception change, because performance has been fundamental, but looking at that performance and believing that performance and, in fact, I think markets have really supported our disinvestment strategy. So to some extent, we have taken a contrarian view because one line view, which was of which we have been the prisoners last 15, 20 years. We think that fiscal deficit will be, sort of handled by one item, residual item in the budget called disinvestment.
Okay, Mr. Pandey, then is it a fact that the disinvestment as an input is ceased to be a fisc tool to manage the fisc?
Yes, I mean, not as a very important, very significant item. Every item matters. In an account, every single item will also come in and chip in. But to, make your fiscal management strategy completely reliant on disinvestment strategy, which could be potentially more volatile. See, on two counts. One, the equity that you are having now, which you can dilute in the market, essentially is come down. Because if you have done about 4.2 lakh crore from 2014 alone, I'm not even counting what was done prior to that. Even post 2014, about 4.2 lakh crores of disinvestment receipts have been received. So, of which significant amount, the strategic disinvestment is about 70,000 crore, which is substantially because of, like ONGC buying HPCL, REC buying, PEC buying REC. Strategic, chunk management control passed on, but effectively, from the point of view of, I would say, reforms, it's actually the same thing, one public sector to another. But minus that also, there has been a very substantial chunk of equity which has been passed on through market dilution. Now, in many, many companies, it has already reached the limit of 51%, 52%, somewhere around that. So practically, sort of you can't go further down unless you take a decision to fully privatize, which in any case has to be done as per a new policy, and which is time taking, which you have to decide also bare minimum is to be maintained as well, to be retained as per the policy. So that is one factor where, our expectations should also be tempered with, we can't have very tall targets all the time. The second thing is, many a time when you are a value creating phase, your dilution should be calibrated, moderated, sometimes, to wait for value to accrue. So it's not really, it should not be like, it cannot be like a revenue stream where taxes have to be paid irrespective. There is a law with every purchase, GST will come, every sale. So it's not like that. It is a voluntary management. So you have to, and it has to sectorally, you have to manage company. Oil companies, for example, if you have a certain, shock, external shock, a geopolitical event, now your management of that takes far more priority than, doing anything on disinvestment at that point of time. So major privatization transaction will be dependent on whether you conclude it. The process will not fetch you resources. If you conclude it, you get money. If you don't, then entire thing you would be waiting, but actually it will be, so it's like binary. Either you get it or you don't. It's not prorated. So anything of that sort will mean that, 14 months ahead, you plan a target and then you cannot conclude that transaction. Maybe you conclude some, but suppose it includes a major one. Then immediately there will be a very big difference between what you planned and what you ended up with. And how can you make a fiscal management strategy consistent on this volatile item? You might as well be, in fact, dividends are far more stable in that sense than the disinvestment receipts. The third aspect is also to really see that, you cannot actually think in terms of listed companies purely from the government point of view. What suits me? It's not that. I think what suits to all the shareholders, including minority shareholders. Otherwise, the very objective that we listed them in order to deepen stock market, in order to widen, distribution, allow stocks to come in from a variety of sectors, government stocks to be made available to public. These objectives will be fruitless because they have come in to make returns and we are not even, talking about their interest. So that approach also, in a fiscal approach, single line approach, you don't care about it. In a public asset management approach, it matters to you which company, how much, when you do disinvest. Because you have to keep in mind the company to company dynamics in the stock market into view. So that broadly, shareholders' things returns are optimized. So these considerations actually, if you think that while every receipt is important, but predominance of disinvestment receipt as a panacea for public fiscal management is actually also not warranted.